Are you really interested in learning how to scan the market for the best opportunities, build a custom watch list for hot stock trades, and more importantly, increase probability so that you're only trading the best setups on the best markets? In this video, we're going to be teaching you our custom scanning process so that you can narrow down thousands of stocks only to find the best winning trades, the strongest markets, and be able to do that before the market opens. Hey traders, my name is Kozak, founder of No Street Trading Academy, and if you're looking for the world's best trading education and strategies, make sure you hit that subscribe button. Don't forget to turn the notification bell on so that every time we put out awesome content like this, you can get results. Last but not least, give us a thumbs up so we know you're engaged in the content. Now traders, before we jump into the whiteboard and onto the screens, I want to make sure that I share something super critical with you moving forward. The biggest thing that we can teach you as a stock trader is how to find opportunities. The number one reason all of our profitable traders are crushing the stock market right now is because we have custom scans that they rely on, and we're going to teach you those scans in this video so that you can find the best trades and you can feel confident in your abilities to make money. Now, let's jump onto the whiteboard here. Let's talk about these topics because this is probably one of my most favorite videos to put out for you to learn how to trade with. Now, building a watch list. The purpose of building a watch list is so that you can have the best stocks to trade. Then you want to know how to build your scans. The reason this is important is because there's a lot of different scans available. A lot of platforms have scans pre-built. A lot of websites, a lot of YouTube channels have scans that are just floating around. But that doesn't necessarily mean they're going to give you high probability trades. What we're going to do is we're going to teach you how to set up the custom scans. We're going to show you how to scan the market and why the scans that we use produce 90% of the successful trades that we rely on. And then last but not least, depending on if you're a day trader or a swing trader, we've built custom scans for the platform so that everything is pre-built for you moving forward. You can day trade the market for an income and you can swing trade the market for building your wealth bucket. Rest assured, this is going to be one of the best videos that you've ever watched as an active trader. Now, let's jump onto the charts. I want to get right into this material so you can learn how to find the best opportunities to trade. Welcome back, traders. In this video, we're going to be breaking down Stocks Explained Part 5. Now, if you haven't had a chance to watch the prior video, we broke down all of the different nuances between some of the different trading platforms. We looked at account sections, orders, executions. We talked about level 1, level 2. We talked about chart trading versus dome trading versus order ticket trading. I mean, you name it. We looked at time and sales. We looked at volume. It was quite a large lesson. And we're going to bridge onto this because in order for us to use the platforms effectively, and in order for you to run a business as a trader and make money, you need to find opportunities, which directly translates into strategies. So the difference between stocks and other markets like futures and Forex and cryptocurrencies is that stocks, there's thousands of them, okay? And so what we're going to do is we're going to teach you, we've built proprietary processes that actually help you scan the market, find the right stocks on your watch list, and hone into our main focus moving forward, okay? So let's talk a little bit about building a watch list. This is truly where the rubber hits the road because the first thing in what we do in preparing to trade is that we need to have a list of stocks that we want to trade with, right? With stocks, there's thousands. With futures and Forex, there's literally only 10 or 20 markets maximum. So the key here is that we don't want to be just participating in every single stock. I mean, there's no edge to that. There's no strategy to that. And realistically, there's going to be good stocks, bad stocks, small cap stocks, large cap stocks. There's penny stocks, there's indexes, there's sectors, there's ETFs, you name it. I mean, it just gets overwhelming for the new guys getting started like yourself, okay? So we're going to just kind of strip the layers off the onion here and keep it super simple. Number one is in order to build a proper business, you need a strategy. And in order to get prepared, we've really kind of nailed it down into 4 steps. Rule number 1 is you want to understand what you're scanning for first, right? We need to have a strategy focus. Number 2 is we need to build a watch list based off the specific scan criteria. Number 3 is we narrow down the focus in the list so that we can prepare to take a trade. And number 4 is we execute trading strategies on the charts based off patterns, entries, and indicators. The main thing here is that we've literally done all of this for you except for trading. So we already have the strategies, we already have the scans, we already have the watch lists. All you need to do is learn it and then apply it. Okay. Now we're going to be focusing on 1, 2, and 3 in this lesson. And then we're going to be nailing down the core strategy in the advanced education lessons. So because this is a Stocks 101 foundation program, we're not going to be teaching all of the core trading systems and the indicators in this course. We teach that in our education programs and our strategies classes, and also during our live trading rooms. So the goal here is to give you the foundation so you understand what we're doing, so that when you move forward into the next steps, you're prepared and you understand what's taking place. So there's three platforms that I normally like to teach traders on, and it's really depending on what you're using them for. We need to understand the platforms that we're using for scanning. We also need to understand the types of scans that we need to build, and then we need to separate scans for day trading and swing trading. Day trading is going to be active and quick. Swing trading is going to be passive and more spread out. Now, the 3 top scanning resources that I truly think are really useful, and as always, there's always going to be other alternatives to this, and there's other platforms, and there's other companies. But as an educator and as an experienced trader who's been in this business a long time, I've had the privilege of working with these companies. I know who's doing what. I've researched a lot of other platforms. I know what's good and what isn't. And these 3 are kind of where most of the industry gravitates to in terms of the stock industry. Now, there are exceptions, but these are the main players in the space. So Finviz is a web-based service, and it's actually free, but in order to do the scans, you're going to need to pay for the license per month, okay? And it's actually quite a pretty robust platform for a web-based scanning platform. And we're going to show you some examples here. My favorite is hands down TC2000. And the reason my favorite is TC2000 is I've worked personally with the development team in building scans with them. I know their platform in and out. I know what it's designed to do. It's probably been it's been around the longest, and it's got one of the most robust scanning engines that scans the market in the industry. It's very user intuitive. It also has one of the best charting platforms, and they've also just recently become a brokerage as well, so you can actually trade through them as well. But realistically, their pricing is just phenomenal for what they do. And so we've definitely spent a lot of time building our programs around that. Most of our scans can be used on the gold membership. And the only difference between the gold membership and the platinum memberships are real-time scanning in terms of updating every second in real time. And the gold membership, you just have to click a button to update the scans, and that's realistically, it's just the only difference. Now, the Trade Ideas is a more advanced platform. They are more expensive, and they do some of our scans, but they don't do all of our scans. But a lot of traders seem to like them. A lot of traders like to use them, and they are definitely well known for their algorithms and their scanning capabilities. The only thing that it's important to understand, though, is you got to pick one and stick with it. You'll see me use TC2000 a lot because of what it can do and what it's capable of doing, and so, but it's really up to you as a preference, right? So, special note is you're going to want to start with Finviz or TC2000 first because it's going to be less expensive. And you can also move to more expensive alternatives down the line should you choose to use the Trade Ideas or other platforms as well. Because ultimately, once I give you our scanning criteria, you'll be able to build your scans with whatever you choose if you want to use other resources. So here's an example of a Finviz scanner. This is a web-based scanner. And ultimately, this is very user intuitive. It's very, very flexible. I'm going to go into the website and show you what this looks like. So we're going to pull this up. And this is a website. You can just go to googlefinviz.com. Now, you'll see mine says Elite beside it because I've paid for an Elite version. But what you'll do is you can just go up to the screener, click on Screener. And you can click on this All tab here. And it's going to give you an all tabs. Now, you can scan for pretty much anything you choose. And it's got a whole bunch of tabs down here. You can see down at the bottom, valuation, financial, ownership, performance tabs, etc. This is a very, very flexible platform for scanning. We're going to get into the scans here in just a moment. I'm going to go through them and we're going to do them together. The next scanning platform that I really am very fond of is the TC2000 platform. Now, they're not just a scanning platform, they're a charting platform, they're a trading brokerage, they do stocks and options. And I just love them so much in terms of what they're capable of doing. So let me show you exactly what they are. Okay, let me show you exactly what this looks like. So TC2000 is, they have a web-based version. They also have a standalone version where you download. This is what I'm using. And you're going to notice down at the bottom, I've got different tabs. I've got a strong gappers tab. I've got a sector tab. I've got a correlation tab, a large cap tab. I've got an average reversals tab, a breakout tab, a crossover tab. I've got a hedge tab. I got a gap fill tab. I mean, there's just a lot of different tabs down here, and each one of them has a different scanner on it. And realistically, what we're able to do is we can build custom scans. All of our workspaces have been built using them. And you get an example. This is an example of a gap scanner. I'm looking for certain criteria to find the strong stocks in the market. And so this is one of the reasons why I truly enjoy using their platform, is because we've actually spent a lot of time as a company working with them, building all of the scans and the platforms so that you don't have to go through all that heavy lifting. So when you do decide to use our programs and actually trade with us and actually join our education courses and our live classrooms, you'll be able to get a license of TC2000 and you'll be able to import our workspaces instantaneously with all the scans and everything built. So another one is Trade Ideas. Okay, Trade Ideas is definitely a good environment, but those are definitely more advanced. And we're going to cover Trade Ideas in the advanced education programs. We have a section in the strategies course for them if you want to use the Trade Ideas platform. I will show you what it looks like here just so you understand what we're referring to. This is the Trade Ideas platform right here. So it's just all scanners, and they do have a charting package, but to me, it's not amazing. And that's just me, I'm not putting them down. They're great for scanning. Like, they're very, very, very good for scanning. And that's essentially what we're talking about, right? I've got gap scanners here. I've got pullback scans. I've got parabolic scans. I've got earnings scans, and they update instantly. It's a very, very intuitive, very advanced platform for scanning. They've definitely got good charts, but it's not the type of charts that that you're trading from. They're not a brokerage, right? So they're charting platform and a scanning platform, okay? And so it's just good to know the difference between the three choices, right? Let's kind of talk a little bit about what you want to be putting in your watch list when you build a watch list. Most of our main watch lists or our scans are going to have these columns. You're always going to have a symbol ticker. You're going to want to have a price column, a float column, which is the number of shares, the gap percentage or the percentage change from close, which is a daily performance tracker. You're going to want to have current volume or daily volume, earnings if you're scanning for earnings, company name if you'd like to have the company name, sector if you want to have the sector, industry, or the time as well, okay? You can always add more, right? You can always add more to your scans, but this is definitely a great baseline. Often we will build sector and industry scans separately. And a watch list is not a scan, it's a watch list. We'll explain the scans next. It's just building a watch list is definitely a watch list. You always want to have your watch list pre-configured. What I really do like about TC2000 is we've been able to integrate both the watch list and the scans. So that's one of the reasons why you're going to see me talk about them a lot, is because we can also merge scans and watch lists so that you don't have to build two of them. But moving forward, I want to talk to you, like, let me give you an example here. Let me show you an example. You know, if I wanted to build a watch list in TC2000 for scanning, okay, and if you take a look here, I'm going to load the Ninja Trader platform so you understand the difference between a watch list and a watch list would be like this, right? A watch list is like a list of stocks or any instruments, right? You can add instruments here. If I wanted to, you know, add a bunch of ETFs in here, you can see that this is basically a watch list. So I'm adding all my markets in here to the watch list, and now I've got a watch list of stocks, right? But the thing here is knowing that that's not scanning the market. That's just me putting watch lists on a market that I'm interested in trading, right? If I'm looking at, let's say, the TC2000 scanning platform, and I wanted to basically go through here, you're going to see there's 7,000 stocks here. I would need to scan, set up my criteria, take the stocks in here, and then put them into a watch list that I would want to monitor and I would want to trade. But
what I like about the TC2000 is what we can do with the TC2000 platform is I can actually build a watch list. Okay, I can take all of the U.S. stocks in the industry, which you can take a look here. There's like 5,000 stocks. I can hit the scan button, and if you load our pre-built scans in here, okay, I've got a bunch of them that allowed to pull up my scan. If I wanted to put in large gappers right here, if I wanted to pull in large gappers right here, I can load the gap scan, and then it's gonna, there's all of the most important, there's 7 stocks that are the most important gap scanning stocks that are major criteria players out of 7,000 companies. So now what I've done is I've just turned a watch list into a scan. It's called a hybrid, and this is what we do. And this is why you're gonna see that this is all of the watch list scans that I have under my ETFs and my stock list. And the same thing with my large caps. Like if I have a large cap scan here, here's an example of all my large caps. I've got about 180 large caps in here that are based off of my volume scans. I've got criteria here. So what I want to do in this video is I want to talk to you a little bit about what scans we're building and why they're important. Okay. The first thing I want to do is kind of use the acronym GES, Gappers, Earnings, Sectors, right? This is a baseline. We have advanced scans and more complicated and more robust programs and strategies in our advanced courses, but it's not necessary to get started. We really have a really good opportunity here to keep it super simple and keep it super effective. Now, the focus of our scanning process is to find stocks that are in play for each of these strategies. And when it comes to strategies, there's only 2 main categories that we are looking at. We're either looking at directional strategies, trend, momentum, breakouts, or pullbacks, or we're looking at non-directional strategies, which are bounces and reversals. And you know, you can only trade with the market or against it. Now, our primary focus on majority of our strategies is directional. For stock trading, we're really trying to trade the trends. We're really trying to trade the momentum so that you can understand how to get behind a moving freight train and ride that to the top. And the way we do this is we've got 3 primary categories that kind of make up everything that we're looking at. We're looking at gappers or strong stocks. We call it a gap strong list. This is for day trading, okay? We have an earnings environment where we're looking for earnings plays, and then we can swing trade those for bigger picture trades. And then we have sectors, which is both swing and day, because we're scanning stocks that are in strong sectors, and we can day trade those stocks, or we could scan them based off swing trades, right? Now, we're going to be covering the advanced scans like reversals and breakouts and crosses and all those other things in the other courses, but this is going to give you the foundation to teach you the scans, okay? So if you're watching this video and you haven't yet been a part of our other programs, you can build your own scans like this, but you know, I really encourage you to join us because all of this is pre-built for you and you don't have to worry about trying to reinvent the wheel, okay? So when we talk about the strong gapper scanning, okay, this is a directional scan. We're looking for momentum stocks. And normally, we're basically looking for stocks that have major catalysts, FDA ratings, approvals, any major earnings, any fundamentals that are driving the stocks. You can trade this on small caps or large caps, but the focus is mostly on the small caps due to the range and to the price range, right? Range to price ratio, meaning we want to have a large range on lower price stocks so we get more bang for our buck. Now, float is the big boy in the room. So when we talk about float has a lot to do with how many shares are available to trade, which is the overall supply of the market. And we want to have high volume changes on low float stocks. That's the core concept. We want to have low float and we want to have big movers. So normally our baseline is maximum 50 million shares. It's normally our main baseline, but nailing it down to less than 10 million is a pretty serious play. So normally you can sort by float in the watch list because what happens is low float stocks tend to move very fast on high volume. So if we've got news announcements driving a really good stock and it's got lower float, you're going to see really big trends, really big clean trading trends, and you're going to have cleaner charts. You're going to have stronger catalysts, and we're only really trading to the long side for most of this is because most short sell restriction is short selling and the short sale restrictions are more difficult. So the concept here is we're using fundamentals and technicals, and we're always trading the directional trades for trend trades, pullbacks, and breakouts. Now, there's 3 scans here. You see it's with less than 10 million float, less than 50 million float, or less than 50 on high volume. Either one, I normally sort this all down to 1 scan, and I've really kind of made this, you know, we can make this in Finviz, we can make this in TC2000, but I'll just show you how to do this in Finviz. So you have to have an elite package for Finviz. You can pay for it, or you can use TC2000, one of the two. And the point of the matter is that we want to build the float. We want to put the criteria in. So let's go into TC2000. I'll show you how to do this. Okay, I've got a preset scan here. Gapper is less than 2 million, greater than 2 million, less than 50 million float. Okay, so really it's already pre-built. But what we're doing here is you can say that I've got performance 10% on the day. You can change this however you want. You can build your own scan. Price over $2. I normally don't want to be trading anything less than $1. And I want to have volume over 100,000 shares, so I know there's activity in the stock. And I wanted to have under 50 million shares traded, right? Now you're going to see here that I can sort by percentage change. Right, I can sort by the top players in the room, but really where my eyes gravitate towards is where's the volume? Where's the big guys? Where are these trading, right? The bigger volume players, right? And so it just kind of stands out, right? Because we already know they already meet the criteria. But another thing you can do is you can actually nail this down. You can choose, you can under 20 million float. See, now I'm nailing it down to 29 stocks. And all these stocks gapped up today. These are big play stocks, right? If I look at NHLD, I look at these are KZIA, right? It's a big player, but not a lot of volume on this stock. Let's take a look at this one. This one was a pretty big move here too, AHT. But these are all different stocks that meet our gap scans and our performance scans, right? So the main reason for this is that we really want to find stocks that are in play for the day. And we really want to do that. So let's kind of take a look at what we did with TC2000. We do the same thing with TC2000. You'll see that I've got a scan here, okay? And this scan is really just, I'm scanning all US stocks. My scan criteria says I want price to be greater than $2, price greater or volume greater than 100,000 shares. I want float less than 50 million, and I want price moving up on the day 10%. Okay, so that scans everything, and then I can sort. What I like to do is I like to sort by volume. So I'll sort by volume, and I'll look for the stocks that have the most movement. Look at this. Look at this stock for a second. Out of 7,000 stocks, this is a $5 stock with 93 million shares. What I like about it is I know that I'm not just trading a stock because it's hot. I know that it has a lot to do with this. It has a lot to do with China's energy to produce large-size cylindrical batteries with more energy density after a successful test. That's a serious thing for a stock. So I know that it's a fundamental stock. I know that I can look at this and take a look at the trend on the way up. Like we could have rode that trend all the way up in the morning. Easily rode that trend all the way up. No questions asked. You know, and that's a 5-minute chart. If I go to the 1-minute chart, let's take a look. Look at that uptrend all the way up to the top, okay? Now, if we go into the next one, Hall of Fame, this is a gap and crap. We won't touch it. Take a look at this stock. Like, this is out of all the stocks in the world, out of 7,000 stocks, this is hitting our list on the third radar. Third stock down, boom. Take a look at the 5-minute chart. I mean, I don't know about you, but it's quite efficient to just jump on board pullbacks on a trending stock. Yes, it went from 250 to 350. That's a big move, right? That's a really big move. And so that's why I think it's super efficient for you to learn why this is so powerful, that this is our gap scanners, right? And we can do this, and this is all pre-built. You don't have to build that in TC2000. You'll have to build it in Finviz because we can't transfer the scans, okay? The next scan we're going to look at is earnings. And the reason we look at earnings is because this is a swing trade. It's different than the gap scan because earnings can often cause gaps on intraday charts, but a swing trader, we're not looking to get in and out of for a small holding period. Our objective is to trade for longer time periods and capture larger moves. And this is also due to our availability to trade. You may not be able to day trade. You're probably watching this and say, well, I can't sit in front of my screen every day. I have a job, or I can only day trade part-time. How can I take advantage of the market? Well, what we want to do is we want to scan for stocks that had earnings either the past week or the past month, and then also look for upcoming earnings as well. And we don't need to rush this process, because what happens is we'll often have days to plan the trade. We can wait for earnings to happen and then wait for the chart pattern to play out, then move into the trading. And what's nice is that you're using fundamentals and technicals to drive this stock, and we have the ability to find them in advance. Now, what's nice about the different earnings scans is it's very simple. We're looking for stocks above $2. We're looking for float less than 100 million on small and large caps, because we're looking for slightly small caps and medium cap stocks. You could trade large caps and you could increase the float here. This is really just a preference. You can always change that. We normally want to have relative volume, right? Which means the volume today on the earnings is greater than the average volume. And then earnings, we want to just scan for the earnings date. You can always alter this by adding, let's say, a gap percentage or a percentage change, and you could obviously change the float a little bit more. And, let's go and take a look at what a Finviz scan looks like. This is a Finviz scan, and you can see the parameters here highlighted in yellow, but this one over here is the one that I'm more interested in, because I can scan for earnings, and I can sort by earnings date. So I can scan for any earnings that are happening this week, okay? And that's really kind of useful. Another way that we can do this, so let's go in and we'll do this together. Okay, if I want to go and I want to find earnings this week. So if I go earnings this week, I know that I have earnings this week on these stocks. So I can look to see this one, did it have earnings this week? It might have had earnings this week. What I also like to do is I like to cross-reference on my earnings calendars to see. I like to see, give me a sec here. I'm trying to find the earnings link here. There it is. So this is an earnings calendar, and we talked about this in one of the previous videos. If I want to go on the monthly, and I know that I'm looking at earnings this week, okay, and I know that I have an earnings scan this week, I can look at the weekly scan, and today is Friday. So let's go to next week. So I know that I got, 1-9. I got a lot of earnings on the front end of this month. So what I can do is I can even sort by next week, earnings next week, and these are going to be the stocks that have earnings next week. So if I look and I can cross-reference, if I go on this day, these are all the earnings that are happening on that day. I could go on to this one here. These are all the earnings that are happening next week. And what's nice about this is I'm now scanning not just for earnings, but I'm also scanning for stocks that meet my criteria that have earnings next week, right? So that's not just looking at, say, an earnings calendar, but I'm actually using a scan to find that. Now, why would that be important? Because what we're trying to do with an earnings scan, okay, is we're going to use this to kind of build a watch list. So we want to have a list of stocks, that we've sorted for, so that when the stock trades, and then all of a sudden, boom, we get an earnings. We get a big gap up, and the market just goes like this for 2 days. We get really positive earnings. We're not even trading on those days. As a swing trader, it's not even important. What we're doing is we're saying, okay, we had positive earnings. Now what I want to do is I want to wait for that market. Let's say that's the big gap up earning day. I want to wait for the market to trade up a couple days, pull back, and give me my pullback flag pattern so I can get on board a swing trade and I can ride that. The earnings is our cue to pay attention to the stock. As a swing trader, we're not really worrying about the day that the earnings happen, which is really, really great. So you can scan for earnings at the end of the day. You can scan for at the end of the week. You can keep them on a radar. And then when it hits, you can start watching that stock and be a lot more active. And we teach you the chart patterns. We'll teach you how to trade those patterns and all of that fun stuff. Okay. One thing I do want to do is I want to point out that when you're prepping for the earnings scan, okay, here's a couple things you want to look for. And, we want to preferably have a decent breakout from the prior day on the earnings. We want to have higher volume. Right, and the reason for that is we don't just want to have, we want to see that we have lots of volume on the stock. Normally, you want a gap breakout or a move. Okay, you want a strong move from the news. That signals that the fundamental was pushing the stock. We want to see price clearing a range. We want to see that the price is actually trending out of a breakout from that earnings release. We don't want to see that the market just stayed flat. Okay. When we run our scans, we need to look for the above criteria so that we can assess the stocks to put on the watch list. As a swing trader, we're not actually trading the breakout or the news day. We use that fundamental day to get us prepared to add those types of stocks to the watch list. Okay. Now, a couple odds enhancers here, just to kind of help add some probabilities to what we're doing. Lower float is always going to be better, because that's good earnings on a good volume stock with lower float. Volume is the key here. The higher the stock is priced, the more volume needed to move the stock. Okay, higher short interest can be good. Good strong catalysts often lead to short squeezes on bullish news releases. The close on a breakout day is important. The stronger the close, the better. So if we get a breakout day and the earnings is closing at the highs, very good, right? Earnings reports takes place every quarter, so you want to prepare for that. And be aware of the sectors. They report around the same time, as this has a lot to do with seasonality. When you're entering trades, use volume for confirmation. Look for impulse candles and higher volume on the impulse, lower volume on the pullback. We teach that in detail in our education course. So we teach pattern recognition, we teach volume pattern recognition, so that when you're looking for trading, you're going to learn that in our strategy sections. Preferably, it's also a stronger sector, so that's always good. And we're going to talk about sector strength right here now next. And then the entry focus, we just want to make sure you understand what a pullback is and a break pattern is and a trade flag pattern is, because the concept is to make sure that you're not just getting into a stock randomly. Like if we have a stock that's gapping up, okay, we're going to probably have some consolidation. Maybe it pops up a little bit and then it pulls back, and then we get the pattern, and then we want to get on it. We don't want to just be sitting around for 5 or 6 days waiting for things to happen. We only want to be getting involved at the right time, because as a swing trader, it's about patience. Okay? As a day trader, you're acting every 1 minute and every 5 minutes. So on our gap scans, totally different story. It's a totally different way of thinking. As a swing trader, this is going to be useful for longer term plays. Okay? So we also have this in TC2000. So I have an earnings tab down here. And what we do with this is we sort by earnings days. So, you know, I'll put this up here, and I'll just find that, okay, so today is the 13th. I'll go to my calendar. So I'm going to look at everything starting off the 16th. So I'm going to go down there it is. So I'm going to sort down the 16th to the 20th. Okay? So one thing that I'll do is I'll look at, you know, the 16th to the 20th. And I'm going to want to see, there it is. So right here, CRUS. So this has earnings next week. And so we'll teach you the strategies, but what we're doing is we're trying to see, like, if we've got a strong stock, okay, this is a daily chart, or that's a weekly chart. Let's take a look at a daily chart right here. This here is in an uptrend, and it's actually cleared the 200 period average. So if we get positive earnings, that's a very bullish thing. If this stock releases positive earnings on Monday and this gaps up, just to clarify, if this gaps up on Monday on positive earnings, I would then want to flag my stock and add it to the market. I would then go down here and I would say add to watch list. So add flag. Give me 1 second here. One second here. So what we would do is I would say I want to add this watch list membership. I'll click on it and say I want to add it to earnings this week, because that's going to be next week when it comes up. So now I've added it to this watch list. That's a mark. Another thing you can do with these charts is you can actually flag them. So if you wanted to flag it instead, you can come in, you can flag it, and then it just automatically comes on a flag list. So there's many ways to use TC2000 that keeps you on your watch list. The only thing is this is an all flag symbol, so I don't like to normally do that if it's an earnings play, because I have other stocks that I'm flagging depending on the day, and that's important to know that. So this would be a great example. Same, look at this one. Okay, this is a huge potential. If these stocks give positive earnings and it's already in such a strong uptrend, you can understand what's going to happen here, right? If this stock puts positive earnings, I want to participate not on the day that it pops. I want to participate on the pullback because that's where we're going to see volume, and then volume will drop, and then volume will pick up again, and that'll be the cue to get in another week or so. That's the key for a big swing trade, right? And so these are the things that we talk about in our strategies that allows us to be able to go in and sort, okay, and allows us to be able to sort that. So this is kind of why I like to teach the day trading strategies and the swing strategies in the strategy class separately. We have our courses broken down for this, so it's completely different discussions. But since this is an intro video, we're just let you know that we're going to be teaching you day trades and also teaching you swing trades, okay? Now, this is one of my favorite scans, and it's to do with sector scanning. And I do think this puts the power in your favor. I do think this puts a lot of potential power behind what we're doing. And it's really important that you understand that stocks are not really that important. The sector is more important than the stock, and then the market is more important than the sector. So we actually want to know what sectors are in play. And what we're doing here is we're scanning for strength and weakness. This can be done for day trading and for swing trading. You could be doing this as a day trade or a swing trading approach, okay? So let me kind of explain something. Sector scanning is one of the most powerful ways to sort through stock lists because it involves fundamental and technical weighting. And you can use the platforms for this. So that's what they're designed for, right? The TC2000, the Finviz platforms are designed for this. And we want to look for strong stocks and strong sectors in strong markets, right? We want to short stocks in weak sectors and weak markets. The concept is we buy strength, we sell weakness. And when we apply our core strategies to this, it just becomes fantastic. So I'll give you an example. We want to first determine your objective. Are you day trading or are you swing trading? Then we can nail down the sector to the stock. You can also go into the industries, right? And then you can nail down how you want this to work. Now I'm going to show you how to do this. We're going to do this together. But the concept behind this is that also sector scans don't always require float concepts. Like float is always not a requirement for everything that we do, just so you understand that. But higher volume is. We want to have volume in the stock for liquidity. But let's talk about this, right? When we look at sector analysis, it has a lot to do with the flow of money through the world, right? We don't just want to assume like there's different times a year, different companies perform better. It has to do with their business model, has to do with the time of year. A great example would be Christmas time. You got all the consumer retail stores are going to be booming because they're selling a whole lot more stuff around Black Friday and around Christmas time, right? There's different times where tech stocks perform and energy stocks perform. So the reason for this is that we can sort right now what's happening. We can actually go in and find the sectors that the banks are participating in because only really 10% of the stock's movement is relative to the stock. 50% is the market, 40% is the sector. Now that's just an estimate, but it's still important. Okay, so there's 3 sites that I want you to bookmark. Okay, there's a sector spider site, there's a stock charts site, and there's a Finviz site. Okay, and I'm gonna show you what these are. Okay, just so you understand what they are. So let's go in here and we'll find these together here. Okay, so we've got the sector. Okay, so the first one we're going to do is we're going to basically look under groups. So I'm going to sort for the groups. This is going to be the one for Finviz. So you go to the home page on the Finviz, you go to groups. Okay, this is where you go. You want to bookmark this page, Finviz groups. The next one we're going to look at is the sector spiders. And the reason this is a good one is sector spiders. It'll allow us to track the sectors here as well. We'll talk about that. These are sector ETFs. And then we're also going to look at the stockcharts.com free website. It's an alternative here. You're going to want to go to stockcharts.com. You can go down here to, let me just double check here, sectors, perf charts. Go to perf charts. Sector ETFs. You can go down here, okay? And you can see this is another way of visualizing it. So technically, they're all 3 doing the same thing. It just depends on which one you prefer. My go-to has always been Finviz. It's just me. It's just more intuitive. It just has so much more going for it. I think it's the best. It's this one here and also TC2000. TC2000 is the Cadillac. It's what we use in our trading rooms in the school. This is to get you started so you understand the power behind it. Okay. Finviz is going to allow me to go up here and I can sort by sector or industry. Okay. I can go down here 1 day performance, 1 week performance. I can go 3-month performance. I can look over the year. Okay. Today, I can tell you right now that the best performing sector was real estate. Okay. I can tell you the second one was energy. So you can see this here as well. If I sort 1 day performance, I can go down here and real estate and energy here. But these are ETFs. These are not the sector. So these are ETFs that track the sector. And we'll talk about those more in detail. These are just ETFs through the sector spiders is a different way. These are actually tradable assets. I'll show you what they are in a second. But and the other one here is this is also tracking the, let's change this a little bit to this week. It doesn't give us the day. It's just the week. So technically, if we're keeping it simple, let's just stick on the Finviz because it's the easiest way for you to do it. You can go and play around with the other websites after. I really want you to just get good using the main one, which is Finviz, and then also we're going to go into TC2000, and we're going to go to our sector scans, okay, which is here. Okay, now let's talk about the Finviz first. The first thing we want to do, okay, is we want to identify if we have a strong market bias. Well, since we're always technically looking to go long the market to start, we're always going to be looking on the long side first. Once you get good, you can start shorting stocks because shorting stocks involves a lot more bells and whistles and stuff like that. So the sector is what we're going to do. We want to look for the strongest sector, and we want to look for the strongest stocks in that sector because now we're stacking the market and the sector and then the stock all together. Okay, now this is kind of like a mini strategy that we focus on in the actual courses, but I want to give you the understanding now how this works. Now, the first thing we do is we can sort for 1 day performance. Okay, so what we do is we look for the strongest sector. Okay, in this example, you know, we can see in this picture, it was real estate was the strongest, and then communication services were the weakest. But let's go and actually look at a real-time example. We can take a look at here that today we had 1 day performance. The best one was real estate and then energy. So these are the two top ones and these are the two weak ones. Okay. So I'm really only interested in energy and real estate to scan for my stocks. So what I'll do is I'll click here. I'll click on this. It's going to open up all those stocks. I'm going to go and click on this tab down here. It says overview. Okay. I'm going to click on overview. And the reason this is important is because now what I'm able to do is I'm able to sort through the percentage change. So I'm going to click on percentage change, and now I can sort through all of the stocks in the world, and I'm able to nail down the top stocks, okay? And where my eyes gravitate towards is I'm looking at the volume. Where's the big volume? Right here. That's where the big players are playing. And that's where I want to play because they're the ones that are going to be driving the stock for a reason. That's where the money is. So if I wanted to look at AHT or all these other stocks, right, that's one way I can look at it. I can look at this stock. So if I look at this stock today and I look at, you know, this is, let's take a look at a 1 minute chart. You know, even a 5 minute chart, you can see the stock, right? You can see that this is a pullback, this is pullback, 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 rip to the upside. That's what we're doing. This is a strong stock in a strong sector in a strong market. There you go. You don't have to question whether you should be trading stocks like this because it's money. It's an opportunity. Okay. Let's take a look at the other industry. Let's take a look at energy. Okay, energy. Let's hit overview. Perfect. Remember what we're going to do? We're going to sort through percentage change. And I'm looking for the big player. Let's take a look at this one. What was Tellurian? High Point Resources. Let's click on it. Okay, this one here didn't have a lot of movement, right? Didn't have a lot of movement, so that's okay. We can go back and take a look at the next one. Take a look at this one here. And I like this because you can sort and you can see the movement on the day. Not a lot of movement. This one here. Take a look at this one. Not as much. This one here had some pretty good movement. A lot of volume on that stock. So let's go in here and take a look at the 1 minute chart. And this one here is a penny stock. I wouldn't touch it. So we'll go back. And I should have looked at the price tag on that first. So it was a penny stock. And let's take a look here. This one here is $2. This one here is 13. Let's take a look at this one. Delic. Okay. Decent move on the day. Let's go into the 1 minute chart. Take a look. Strong stock. Very strong stock today. Right, gapped up, big trend, pull back. Look at that. Right? You can see what we're doing here. We're looking for the stocks that are not only giving us an edge based off fundamentals, but we're giving it off technicals, okay? And so this is why we do this. You want to look at a swing trading performance. You want to look at, the 3-month relative performance. Where's all the big money trading to the long side right now, longer term? Industrials. 3-month relative performance. I normally don't go out past a month because 3 months is too much for me. Even a week. All the stock, all the intraday swing trading, intra-week swing trading, they're ultimately looking at energy. So energy stocks on the week, right? And these are the energy stocks. So I wanted to give you an edge on this because it's truly an advantage. It's truly an advantage. Another thing you can do is you can nail down by industry. So even though you're going into the sector, you can actually nail it down into the sub-industry if you really want to go deep down into this, and you can go into the industry. Take a look at the strongest industries because these are industries inside the sector. Let's go back and take a look at this. If I go up to the drop down, I hit industry. Take a look. This is all the industries in the world, okay? And the strongest industry inside of that real estate sector was the REITs. And if I go into the overview, if you take a look, that's where those stocks were. Those stocks were in the REITs. And that was the AHT stock that we were just looking at. And, that's the stock, right? That's in the REIT. So we can go into the sub-industry, into the industry that's inside the sector. Because think about this. Inside the sector, you've got these sectors. But inside of these, you've got industries. And that's the industry list. If I go in here, industries, real estate, right here, I know I can sort through these at the top. So this is nailing down fundamental scans with technical scans, giving you a reason to want to trade them, right? Which is super, super important. And I always do this. I'm always sorting for the volume. I'm always sorting in and finding the volume so that I can look to see where the money is. I want to know exactly where the volume is. So when I do my scans in Finviz, I'm looking for the volume, okay? But here's what I want to do, okay? Here's what I really want to talk about. This is using the Finviz scanners. So you build the gap scans, okay? And when you do the groups, it's always done on an intraday basis or a swing trading basis because you're not building group scans because you don't know what the market's going to do until it does it. So what you want to do is you want to look at relative performance and then sort down either by sector or industry and then go into your stock. And what I'll do here now is I want to kind of shift gears for a second. I want to show you in TC2000 is TC2000. One of the things I like about using their platform for this is I can literally go to my, I have all my tabs down the bottom. I have a sector tab. I can literally, I have an industry list. Look at this. I have a sector list at the top, sector index. I have an industry index here. And then down here I have my stock watch list. So what I do is I just automatically will look, I will sort by percentage change. I can see real estate's the strongest sector. Same thing we just seen on Finviz. I click on it, okay? I can sort in here by REIT. I could go in here, I can see that this is the strongest sector. I can sort in here, that's the REIT. I can click on that, and then I can nail down and I can see that these are the top 5 players in the industry sector inside the index that is giving me the best trades. So if I click on this, this is the stock we were just looking at. It's the exact same stock we were just looking at on Finviz. The only thing it's more intuitive on a platform, right? If I go in here, take a look at this one. Look at this stock. Never heard of it in my life. It was a $9 stock. It moved to 10 bucks. Look at this. Look at that trade. Like it just, there's a reason. It's a serious play. Take a look at this one. This one here opened up, traded up. 5-minute stock, gapped up, pulled back to the VWAP, trend trade, got above the 200, trended all the way up through the day. I mean, it was just a clean stock all the way up. Look at this one, HT. You can just see why we're doing this because now we're sorting through 7,000 stocks, nailing it down to 5. You're only looking for 5 markets to trade. You could easily just trade one. I mean, what's one amazing trade a day going to give you? You could trade a bunch of them, but The question is, do you need to? No. You can just easily make it super simple and just scan like this. So a couple things I always like to tell traders when we're getting ready for scanning is we need to have preparation. For day trading, prepping the market scanners are always done best before the market opens. We have our pre-market preps. So essentially our scans will start loading in the pre-market for any volume. We'll scan for the gappers. We'll scan for the pre-market right off to the open. When we're scanning the sector and the industries, we scan the pre-market as well. So we're doing the exact same thing. So what we'll do in here, and this is for our trading rooms and for what we'll normally do, is I'll have two main tabs that I'll be playing for day trading. I'll have my strong list and I'll have my sector list. My strong list will be filling here, so I'll have right here that says post-market. In the pre-market, this automatically turns to pre-market. And what this does is it allows me to see all the stocks that are hitting the scanner, the criteria, the float scan and the volume scan and everything that's. I want to know where the prop firms are starting to move money in before the market opens. And then what ends up happening is I'll be able to see these, and as soon as the market opens, this list will go blank and they'll all fill up in here into my main list. And the reason for that is we have a pre-market list and then we have our main watch list. Now remember, this is our job to be able to sort through the volume, and I can go in here and you can see that REIT also hit our gap scanner. So not only was it in the sector scan, it was also in our gap scan here, which is why we have our scans overlapping like that. Now, when we're doing this, I'll also be scanning at all times to see, okay, which sector is stronger right now? What's the strongest sector? Because I might have a stock that's not hitting my strong list, but it's also hitting my sector list. So I would scan by real estate, and then I would go in and I would find the biggest players here, right? I would go in and I would find that. I would try to find out which ones I'm trading. And that's all done pre-market and right off the open, because we're done running our room by noon, right? We don't trade into the lunchtime. And so that's for day trading. Remember, things can change as a result of the overall market. So what's going to happen is things are going to happen off the open. Things are going to happen off the open. Things are going to get fast. Day trade plays are almost always driven by gappers or sectors. This means we're always having a fundamental and a technical analysis combination. Swing trading, okay, this is different now. Swing trading is always done on Fridays or Saturdays or Sundays because we want to prep for the next week. So for swing trades, if you work all week, no problem. What you do is you build a watch list to look for stocks that either happened that just gave us the earnings. Okay, let me give you an example. Let's say it's Friday, okay? What you can do is you can have kind of like, this is everything that happened this week. Okay, and then everything that's happening next week. Okay, and what I would normally do is I would say, okay, if this is Friday, I would sit down for an hour or whatever, and I would look at all of the stocks that gave me earnings during the week. Was there anything that gave me a good trade, a good clean chart, gapping up with earnings? Because then what I'm going to do is I'm going to say, okay, that happened on Wednesday. Then I had Thursday, and then I had Friday. So I'm waiting for a pullback. Maybe it's going to happen in a couple days from now, maybe a week from now. But I know that that's going to go on my watch list, and it happened on Wednesday. I'm finding it on Friday. Maybe on Tuesday I'll get a chance to enter that trade, right? And so that's why we do this and we plan it. And we can also plan for the next coming sectors that are coming as well, or excuse me, the next week's earnings as well. And for swing trades, we need the catalyst to move the stocks. Like I said, you need the earnings. Earnings tend to be the best result for major PR releases like that. We need news to drive it. And then we normally wait for all the herd mentality to jump in like a bunch of sheep. And we wait like technical professionals, and we trade the pullback and we ride that to the moon. Okay, now we don't want to become too overwhelmed with this entire process, right? This is really just a simple way of trading. We have day trade scans for gappers and strong stocks. We have sector scans for strong stocks and strong sectors, and we have earnings scans for basically strong stocks that are producing earnings that give us a swing trading opportunity. Okay, we don't just want to be the herd mentality jumping in on emotions. We want to just give it time to play out if you're scanning for the earnings. Okay, so what I normally like to do is I like to have a kind of a checklist. You can write this down. Whenever I scan a market, I always ask, what scan is the stock on? Is it a day trading scan? Is it a swing trading scan? Is it a sector scan? And do I know the stock? Like, have I ever traded it before? Have I ever heard of it before? What's the news on the stock? Like, is it something that, is significant or is it not? Is it a sector play? Is it a gap play? Is it an earnings play? These are the things that I ask. And does it have a history of being a runner? Like, does it have volatility in the past? Like, if I look at a stock that's moving today, if I look at the daily chart, I'll be able to see, has it had any movement, right? And I always want to check the direction. I always want to check to see if, you know, the market's moving in my way or if it's giving me clear clarity. And we'll go over all those in the more advanced strategy stuff, because you're going to want to ask questions on chart patterns and strong indicators and stuff. But the nice thing is that we've built all of it for you. So once you process this, we move into the trading phase. It's go time, right? We add the stocks to the watch list. We look at our charts, we monitor it, and we take the trade, right? And if it's a swing trade, you can set alerts. You can set alerts for them to let you know. You could be out for dinner on Saturday night, and then on Monday morning, you know, you go out for dinner with your friends again, and you get an alert Monday night or Monday afternoon. Yeah, the stock's coming close to your area, so you can prepare. Because swing trading is a little bit more passive, right? Now, this entire lesson has been on scanning for stocks in play based off criteria, okay? You will most likely not be trading all of this at once. It's very important to know that this is a theory-based lesson. In fact, it's strongly suggested that you don't try to trade all of this at once. I highly encourage you to join the education programs in the strategies class, learn all the technical patterns, come into the classroom and pick, are you day trading? Are you swing trading, right? What is your focus? And if you ever have questions on setting up the scans, getting into Finviz, getting into TC2000, right? That type of stuff, you're going to need to either check with our support team or send us an email, because we can easily put you in the right direction. Plus, we've built everything on the TC2000 platform already. So if you're going to go that route, we've already built everything for you. And if you're going to use Finviz, you'll definitely just have to take those scan parameters and put them in the Finviz scanners. Okay?
Welcome back, traders. I hope you loved the video on how to scan the market for hot stock opportunities. Rest assured, that's not the only video in this series. If you like the content, below this, we've got several links to all the other videos in how to get started as a stock trader, and that's going to get you the results moving forward. Last but not least, make sure you hit that subscribe button and share this video with a friend. I'm sure they're going to appreciate it. Make sure that you ask a question and leave comments below so that we can help you move forward as a trader. Take care, traders. We'll see you in the next video.